yesterday's gap did nothing for the bulls, having quickly filled it yesterday. So the NFP came out, and this actually turned out to be negative for the market for some reason. We actually exceeded the number quite handily, which drove gold down initially, but then huge buy response from that as a result. So that's got the markets inverted to each other right now. Risk flows are to risk off scenario, but consequently, I'm not sure I understand why. That said, we're in a 2-day structure, still gap up. The whole structure is gap up. Is what I'm saying. Yesterday's profile was B-shaped, which is a long liquidation. The gap up was kind of garbage. Longs let it get all the way, let it all go, and the overnight low may be a good reason for them to engage, pushing it back into value. That could be because the full session point of control did move down. And there are some trap buyers that I can see, at 78, 79, using all these big buying prints as an example. That said, overnight profiles Bi-modal with the point of control still in yesterday's range, indicating balance may not yet be over. Full session point of control is shifted to yesterday's IB low and has been tested already, and then now it's shifted down again. I believe the shift will be somewhat important in the opening session. So if risk flows keep pressing higher, then we'll be looking for an opening range trade to get away from the full session point of control. Right now, we're in a 3-point gap, which is small. If sellers are active and strong below 77, then I would expect a test of 66 where singles start. That may be the end of the downside run. If buyers are looking for better value, then a test of 60 may be in line back. That would be all the way back to the major point of control for this range between 52 and 80. On the high side, we need to push through 78 with real conviction. And if we do it, I expect 86 to be tested, which would be upper KLVN of the weekly before we would go back into balance most likely. So plan at this point is a small gap. Watch risk close. Look for that opening range trade. There's a fair number of trap buyers at 78. Inability to get above 73 should mean a liquidation lower. If we are able to quickly close the gap and get back above, then buyers may hold on. Sellers may retreat and look for another place to push back. That could be. So ability to quickly close that gap and buy back into the range may cause short-term balance, as I was saying. So we're leaning short to risk close, but we will really focus on what the auction is telling us and just try and do our best.